Welcome to the 2022 Deal Street Asia Indonesia VC-PE Summit. My name is Alan Hellawell. I am founder of Gizmo Advisors and also host of the Indo Techno podcast. Our panel is focused on the topic, what's next for Indonesia's well-funded and crowded SME digitization space? I am joined by two true luminaries in the field, within Indonesia's startup community, Nipun Mira and Krishnan Menon. I'm going to leave it to these gentlemen to do justice in introducing themselves and their companies momentarily. Now, we come together today as the modernization of the SME in Indonesia is one of the single greatest megatrends in Indonesia technology. SMEs, in fact, account for more than 60% of Indonesia's GDP and no less than 90% of its working headcount. They are truly the backbone of the Indonesian economy. Modernizing the country's mom and pops retailers, making them more efficient, meeting their financial needs, and simply preventing them from being eclipsed by Indonesia's longer-term growth are thus crucial. Today's guest, Nipun Mira, founder and CEO of Oola, is committed to infusing Indonesians' traditional retail with technology, with modern retail best practices, and with data science in order to revitalize this linchpin to the Indonesian economy. We're also joined by Krishnan Menon, founder of Lumo, which we like to describe as the Shopify of Indonesia. With no further ado, I'd love to have each of you spend 30 or 60 seconds introducing yourselves better than I have just now and your companies, and then look forward to a lively discussion thereafter. Nipun, do you want to start?
Sure. Thank you, Alan. Thank you, Deal Street Asia, for having me here to represent Oola and the mission that we are working towards. Oola can best be described as taking a new spin on retail, and I will talk about what that means. But in crux, it is a B2B e-commerce company where the one end of the B is a small store, a small retail store in a neighborhood, which services the consumption in that neighborhood. And there are millions of these mom and pop stores in the country. Estimates put this number at about 3 million, servicing anywhere from, in the FMCG category, about $40–50 billion of demand. If you include perishables and staples, potentially $120–130 billion of demand in Indonesia alone. But every emerging economy has this interesting characteristic where small stores have been deeply embedded into the economic and cultural fabric of the country. It's not just, and I want to emphasize the cultural aspect also because A, they have a huge economic advantage, but B, they're also very plugged into the neighborhoods. So the question that we asked ourselves when building Oola is, there is a highly complicated supply chain that gets products from production to consumption. Can we simplify that? And in the process, imagine retail as it should be in 2022. And what I mean by that, and this is where I would love for you, for the listeners to imagine a little bit. When the US modernized its retail, it was pre-internet, and the best answers that emerged were Walmarts and Targets of the world. When China modernized its retail, it started before the smartphone era, and the best answers that emerged were the likes of Alibaba and so on, JD and so on. But Indonesia is aggressively modernizing retail in 2022, 2021, 22, where smartphone penetration is at an all-time high, but the same consumption patterns and demand patterns and supply patterns actually still exist. So can you invent a new form of retail? I think to me, that's the most interesting, exciting question that I take a 10-year horizon, and that's what Oola is building towards. In the short term, we can be best described as a supply side sourcing company for small retail. In the long term, it's about what does retail look like in 2032.
Fascinating. Krishnan, we'd love to learn about Lumo.
Awesome. Well, thanks, Alan, for having me here, and thanks, Deep Street, for having me here as well. So we are Lummo. We are a pure play software company, which obsessively focuses on a specific subsegment of entrepreneurs and brands, which is SMEs, who focus on trying to sell online, right? They're already either selling online or they're trying to sell online. They're in the process of trying to sell online. And it covers a range of aspiring entrepreneurs as well as brands. The idea of wanting to build your brand is a very important component of the type of merchants that we try to cater to, right? Primarily, they come from categories such as lifestyle, health and beauty, food and beverage, toys, babies, all these categories where brands are more relevant compared to commodities. And it's also another need that we observe from these merchants a lot is that they are trying or already are or trying to build a direct to consumer relationship, right? And what we do is we offer a software stack that helps them off the shelf end to end do two things. One is improve their operational efficiency, and the other is improve the direct to consumer business, which is direct to consumer relationship. So that's in a nutshell what we do.
Thanks for that background. Now, I'm working on the assumption that many in the audience might have a relatively rudimentary awareness of Indonesian e-commerce, and that they may know not much more than the fact that who are the players in B2C e-commerce, which include players such as Tokopedia and Shopee, and which in and of themselves are quite large. I would say that each of them probably did $15 billion of GMV. Now, I would like you guys to kind of describe what the environment is beyond these kind of more household names, and how we intend to thrive in what is a much more heterogeneous environment than what people probably understand Indonesian e-commerce to be. Krishnan, do you want to give us some help here?
Absolutely. So in the year of 2020, there was $65 billion of online commerce that was done in Indonesia. 40 out of that was done by big marketplaces, Shopee, Gojek, Tokopedia, etc. 25 was done off marketplace. So that's Instagram and all sorts of, or WhatsApp and all sorts of off marketplace. It's a big 40%, right? And in 2025, Indonesia alone is going to be a $150 billion online commerce market, out of which around 100-ish would be done by the big marketplaces, and the rest would be done off marketplace. Now, again, when you look at the evolution of all these big guys, right? Like, the OGs of Indonesian online commerce scene, they are all in a three-way relationship, right? Like they are in a relationship. It's a love affair between them and the consumer. And then you have this merchant who's this third wheel in this whole relationship, right? And this is sort of played in a role where, and this is sort of how it's very normal how digital commerce has evolved generally. I mean, people focus on consumer first and merchants support the system. And eventually, companies like us or even Oola and a lot of other B2B focused people come in who say, you know what, why don't we just focus on these merchants, right? And why don't we support them sometimes with respect to local ecosystems like Oola is doing, sometimes with respect to software, some others maybe fintech, like loans, etc. But a breed of companies that come in, which are not consumer companies, but actually B2B companies, and they start serving the merchant and keep him at the center of his life, right? And that's the new evolution that's happening up, and that's where I would think us, Oola, and a few other players would fit right in.
What would you add to that characterization, Nipun?
It actually leads very well into what I was going to say. See, the entire retail market of Indonesia, by most estimates, ranges between $300 to $400 billion. Okay. And this is fairly consistent, even if you look at percentage of GDP compared to other countries in a similar zip code. And what that tells you is, and as Krishnan was mentioning, the amount of business that is going through B2C e-commerce, if you adjust for removing virtual goods like tickets and mobile phone charges and so on, is actually sub 10%, right? So what that means 90% of the business, despite a decade of e-commerce with billions of dollars invested in these companies, is still offline, right? And what's not changed is, so you have almost two independent phenomena that are happening. One is the smartphone penetration happening, and you see a lot of users, especially in our small retail segment, that are on TikTok, on YouTube, on WhatsApp. but then they're not using that intelligence of technology to actually run and improve their business, to do business in a new sort of way, right? So those two distinct phenomena have to be combined. And that's what, in many ways, what Krishan is talking about and what we're talking about. One other thing which is also important to understand is, especially for the Western audiences, if you imagine how e-commerce developed in a country like the US, Amazon went and put in a whole bunch of supply chain infrastructure to back it up, right? But if you look at how Indonesian B2C e-commerce has evolved, it has done so in a, relatively speaking, more asset-light model. Right? And why that's important is because the big kahuna of retail, which is consumables, which is grocery items, which are purchased in small basket sizes, are incredibly difficult to do in an asset-light marketplace. Right? Which is why now, if you break down the overall 10% and you say, okay, how much of consumables, how much of grocery is going through B2C e-commerce? Versus, let's say, how much of mobile phones is going through B2C e-commerce as a percentage of the total market, you'll get very different answers.
Gotcha. Now, shifting our discussion just a touch, we are unified at Oola and Lumo in our desire to modernize and make more efficient and offer ever greater ancillary services to the SME or the small merchant. That said, I see quite often accounts of how these warung owners and small retailers are nothing short of inundated with any number of mobile apps. And we're not just talking about pure purpose-built apps. They come from Unilever, Coca-Cola, and then all the third-party platforms. And I guess the question is, in addressing the actual title of this panel being well-funded and crowded SME digitalization space, what do the handful of players that emerge as victorious, or at least become the go-to solutions for the major needs of these merchants, what do they end up doing that the other several dozen, I would anticipate, that maybe don't make it around the first bend, they end up not doing? Krishna?
Yeah.
Oh, sorry.
Yeah. No, Krishna, go ahead.
Okay. I mean, I can go first. So honestly, the story is still being written, right? So to be honest, I don't think any of us can give the exact right answer to that, because let's talk in 10 years and then maybe the answers are more set in stone. But early thoughts, at least my humble learning experience over the last 2 years of working in this SMB space, I think the number one thing that's most important is focus. SMB is a 60 million audience, like $400 billion GMV, but it's like saying Indonesia is one country. It's not. You go to Sumatra, you go to Java, you go to, even within Java, it's just, things are different, especially coming from the West. People, West or even India, people think it's one language, it's one country. It's not. Similarly, 60 million SME, it's not one thing. They're very different needs. And what we have done through last 2 years and what's clearly working for us is, over the course of time, we've really focused ourselves into a narrower but still large enough TAM and gone deeper and deeper into that audience and kept on building from the insights that we keep getting from them, right? And that's been what's working for us. And I really think even in case of Oola, that's really been the case. They've been very, very focused. I think Nippon even started in East Java. Nobody starts a business in East Java. Everybody starts in Jakarta. So yeah, I would probably give second that as well for sure. Yeah. Over to you, Nick.
Yeah, no, thank you. Thanks, Krishnan. So I have to re-emphasize this point of focus. It is so easy to just keep getting distracted. I'll give you a real life example in this story, and then I'll address the point that, and Krishnan will find this funny, because a lot of people, potential investors, current employees, a whole bunch of stakeholders in Oola said, why do you have BukuKas and Buku Warung building for the Warung segment when you're building for the Warung segment? Why don't you build bookkeeping? How hard can it be? Guess what? It's a really hard problem. and we can't tackle multiple hard problems at the same time, right? So we said no to that. And luckily for us, at least I'm confident in that the path that we've chosen seems to be bearing fruit so far. Now, your question about crowded, I think there is one very important thing that many people miss. But because when you're building for the emerging economies, one very, very important fact, and I will re-emphasize the very, very part of it, is the kind of audience that you're dealing with are on low-end Android mobile devices. Okay, which means that if your app is going to get downloaded, it has to have a very solid reason to stay on the phone, or it will get uninstalled tomorrow. Okay. 4G signal is not what we imagine it to be, especially the moment you leave Jakarta, right? So which means that every single image that is getting downloaded, every single transaction that is happening has to be incredibly compressed. Right? Now, this may seem very trivial when you're talking about billions of dollars of GMV and this and that, but actually on the ground, these small things matter. And what we've seen is a lot of people are building apps which are 200 megabytes when they get downloaded. Right? Now, there's just not that much space. Okay. So if you're a small retailer with very limited space, an app that does not actually provide value, and value can be defined in different ways. We can explore that in a whole other conversation. But if it doesn't provide value, it is going to get uninstalled. And examples of value can be, can I get everything in one place? Is it offering me the best price? Is it giving me delivery which is consistent and predictable? Or is it arbitrary? Right? Now, those are all different parameters. And also, like you rightly said, you gave the example of Jakarta. If you go over to East Java in a small town like Pasuruan, Lamongan, there is no crowdedness. There is nothing. Right? So a lot of it is also just a phenomenon of where a lot of people have started, as Krishnan was pointing out.
Let me distill 2 points that you guys have made so far and tie them together in a question, which is, we seem to be talking about hardware limitations, literally, in talking about these low-end Android phones. There must also be what you might call software limitations, euphemistically, not literally, and not in literal terms, being a lack of digital literacy. As you guys survey your respective businesses, is the bottleneck more acute on the hardware side or on the software side? Krishna?
So we actually evolved a lot, right, over the course of our time. When we started, we were very focused. We were not focused at all. We were spread out across all sorts of SMBs. And then over the course of 2021, we really sliced and diced our audience, and we actually picked an audience that is actually social sellers, which was around 30-40% of our audience. And then we started building for those guys, and that's how we went much deeper into the whole Shopify-like stack and digital selling. So the audience that we focus on are already selling on Instagram and heavy on WhatsApp, etc. So for us, both in terms of both hardware and sort of for that particular segment, which is now the major focus for the last year and a half, for us, it's much more about teaching them how to, without cognitive overload, how to use simpler tools and get their things done. But they have been trained pretty well by Facebook and Google and their products, right? So that's sort of where our background is. But I think, yeah, Nipun, you can take with respect to your user base.
Yeah, no, I think for us, it's both software and hardware, right? I think the analogy I would give is, if we as a tech company were to say, oh yeah, how hard can it be to build the next Lifebuoy or Indomie or Pantene or whatever? And say, yeah, how hard can it be? Let me just find a manufacturer and let me get it done, right? It's sort of the similar mindset to say that, oh yeah, how hard can building an app be? Right? It's different skill sets, it's different institutional knowledge, it's different capabilities. So for a company like Krishnan's or ours, We are very much on that second bucket where our focus is on optimizing the most details of funnels to say that, okay, we see 10% of users are falling off at that exact step. Why is that happening? Let's go and figure that out and let's fix why it's happening. Maybe it's a communication problem. Maybe it's a software problem. Maybe it's something completely we didn't expect. Maybe it's a competition problem. So all of those things also start to matter, right? So we are a technology company. To me, technology is more software in our case, because we're not actually giving out hardware. But what I was talking about earlier was recognizing that there are hardware constraints in the system and building and optimizing your software stack to be able to work on those segments. And that's what I mean by it's a hard problem. In the same way as building a multinational FMCG company like a P&G or Unilever might be. There's a lot of institutional knowledge. We are, of course, tiny compared to those guys. But the point is more about institutional knowledge.
Understood. That makes a tremendous amount of sense. I wanted to inject more of a current events question into the lineup and ask you each how app usage has trended throughout since the onset of COVID in early 2020, and what specifically has surprised you behaviorally or otherwise amongst your users?
I can go first. So, I mean, we all in some ways pandemic babies in some sense of it. I mean, I think pandemic has, I mean, it's been a havoc, obviously, on a market level, but from the, I've been in Indonesia since 2013, so I've seen the whole evolution of tech in this whole country from the get-go. And I can tell you from days when people told me you can never sell a shoe online to now we are, the micro sellers are looking for product solutions to optimize their business or look for products to buy via Oola or bookkeep or want to have their own shop, like online shop. So the change in perspective or change in approach, right, has just massively accelerated through pandemic compared to pre-pandemic, and then now one could argue that we are on the bottom curve of pandemic, or at least let's hope that's the case. I particularly haven't seen anything change from a user behavior point of view. So what, I mean, of course, more people visit their shops and less people buy online, and there's a small shift. But most of the merchants now you talk to, yes, 2 days ago I was at Tanabang speaking to a merchant, and he's an 11-year-old company selling. It's called Jakarta Scents. He sells perfumes, and for 9 years, he never sold online. In the last 2 years, he's grown up to 300 million a month revenue across Tokopedia, Shopee, and Lumo Shop, etc. And now for him, his major focus is how can he crack TikTok? How can he crack Blibli? And he's thinking, how do I add more channels? How do I improve more WhatsApp? So the thinking has become like, oh, online works. Let me figure that out more. That's sort of where I see people at today.
Yeah, I think there is, I would second that. There is an unarguable secular trend towards e-commerce and app adoption. Now, what we saw in the pandemic was, I would give the analogy of what we had at Flipkart, what we call the big billion day. What this would be like, this massive property with a huge amount of publicity that happens, that on these 3 days, you will get the best deals. Sort of like Christmas in the US, right? And we would see there'd be a baseline. Let's say the baseline is here, the spike would come here, but the new baseline would not go back. The new baseline would readjust to a higher level, right? So overall, it helps expedite the adoption. Now, obviously, it was an unfortunate reason why it happened. Way too much disruption in terms of health and economy. But you could argue that there can be other ways to create the same sort of need in the market, which is maybe more positive and controllable. And I think a lot of the B2C companies have done very well at that, because now if you imagine what was Indonesia like in 2011 or 2012, right? And you imagine what it looks like in 2022. Okay. Imagine at that point there was no Tokopedia, Shopee, and at these scales. There was no Gojek, Grab at these scales. It was still barely any Android usage. And now you look at 2022, and I would ask every person listening to this to imagine, what does 2032 look like? right? And what is that change going to be like? And if that change is going to be anywhere close to what we've seen in the last 10 years, then we're talking about a completely different world in 2032.
Maybe if you don't mind, myopically going from 2032 back to 2022. As we sit here today, the publicly listed representatives of Southeast Asia tech, most notably probably C Group, Grab, and BukuKas, let's just say have not had their finest moments. And obviously public markets everywhere have taken a big hit. And I would admit to, in my discussions with the companies that I advise and mentor, of focusing ever more urgently on monetization and generating revenues. From Oola's perspective, how do we build this into a large revenue generating business? What is the business model that's going to work? Is it SaaS? Is it taking a commission? Is it financial services? What kind of revenue pile, or what's the composition of revenue that we can expect over the next few years?
Yeah, I would answer that question in a sort of provocative way, which is when you look at retail today, does it not make money? The small warung makes money. The organized retail, Alphamart, Indomart makes money. The wholesaler down the street makes money. The distributor makes money. The brand makes money. Who is not making money? So why should a tech company, which arguably has greater operating leverage, and yes, there is a path to getting to that point, not make money? The value pool of the retail channel in Indonesia is somewhere between $30 to $40 billion. And this is value pools. This is not GMV, right? So even if these estimates are off by a factor of 2 and it's $15 billion, that's $15 billion of value. And then you extrapolate that to Southeast Asia, there is enough money to be made. Now, the question is how, right? So in my opinion, of course, now there is only that much detail I can talk about over here, but in a nutshell, it's about rewiring a little bit of the ecosystem to say that can you change the push-based model to a pull-based model? Meaning that so far, everything is all about, there is a producer, the producer pushes the product through a channel, the channel has salespeople who push the product to a retailer, and the retailer then tries to push the product at some point, push versus pull of the consumer. Obviously, this is inefficient. It leads to a number of forecasting issues. The trade inventory is quite high. You don't know what is going to sell at the point of sale, and you don't have any feedback coming into the loop. Now, B2C companies have tried to obviously leapfrog that by saying, I don't need any intermediaries. There is a guy who's selling, there's a guy who's buying. I just provide that connect, which actually works quite well for non-consumables where basket sizes can be large enough to justify deliveries. But the moment you come into consumables with groceries, where the average transaction size is somewhere between $3 and $5, now how do you make that same model work? It doesn't work, right? No matter how you cut the equation, it will never work, right? So you have to rely on different models, or you choose a certain slice of the market where it does work. For example, somebody orders $30, $40 worth of product. So again, what I'm talking about is how do you put the smartphone in the hand of the small warung and enable them to sell products that they've never sold before, to help them make more money, and as a result, and provide working capital, which by the way has its own strategic value, to help them with. So obviously, if your customers make money, you make money. Financial services, I think, is a very important component of this. Not because I think it's the next fancy buzzword, but because in retail, no matter how far back you go, commerce and credit have been tied at the hip. They go hand in hand. It's not a new concept. We can call it BNPL. We can call it whatever fancy term we like, but it's been around forever and it will always be around forever.
Okay, so this former 15-year veteran analyst is going to ask you from a slightly different angle. Rank your sources of revenues as generically as you want. Is it getting your merchants to pay a monthly fee? Is it taking a commission, or is it financial services or other?
Well, at least for me, I can say that it is the first and most important will always be the base commission. Now you're talking revenue, not profitability, right? So there's a difference.
Yeah.
The more profitable one might be financial services, but financial services needs the revenue generating commerce to actually work, right? So I just want to draw that nuance because it's important. Commission is always the first. Second, as I understand today, will be financial services, and third might be any recurring SaaS revenue, because in our world it's more it's different.
Sure. So Krishnan, how does Lumo make its
data.
revenues?
Sorry, data is pretty important too. Data and advertising is something which happens a lot in our space.
Gotcha. Well, let's try to come back to that if we have time. Krishnan, how does Lumo make its revenues today, and how might that evolve going forward?
We never made money for a year and a half since launch, but since July last year we started monetizing, and it's been really good. I obviously can't share numbers, but it's been fairly good, as evidenced by our latest round, etc. For the interest that we had for that. For us, it's quite simple. Like I said, we are a software company. We build software. People pay for software. So that's one part of our revenue. Then I told you we also help them manage their direct to consumer better. That could be through chat, that could be through storefront, and on each order there's revenues, take rates, there's shipping that we offer through our partners, there's payments that we offer through our partners, etc. And each of these we have a take rate basically. So combine all of that, that's how we make money. Eventually, of course, financial services is something that we could tie up. We could also work with folks like Oola, etc., so that the supply chain as well of the merchants are sorted. So essentially, once we can serve the software needs of the merchant really well, then we'll keep adding auxiliary services on top.
Fantastic. Both of you gentlemen have made multiple references to financial services. I want to put a pin in that and get back to it shortly. I, in the interim, want to move down the P&L. And I would say that over the past several years, I've seen something resembling an arms race or a land grab for users, which is usually being fueled by ever-rising customer acquisition costs, which are ultimately unsustainable over the longer term. Speaking as generically as you'd like, Krishnan, how are you making it economically feasible to bring on a new user?
For us, the math is quite clear. It's still in its early days. I mean, the CAC LTV ratios are still a bit more. I mean, since we started monetizing only since July, the cohorts are not very long, and hence the whole where should CAC LTV be exactly going to lie? That's not something that we're very, very clear. Having said that, we know as a target where we need it to be. And as long as the CAC remains sub to that, it works, right? So it's a very simple math. It's not rocket science. It'll take a few quarters to evolve into the space that we want it to be. Now, how we look at acquisition is quite simple. I mean, we have a lot of leads that come through either online or offline, and all these, just like a SaaS company, and those leads go split into self-serve or mid-market based on the CAC LTVs of that the qualification of the lead, and then based on that we can decide, do we put a sales guy to close this merchant, or do we need to do self-serve, or how long can we spend on this merchant, etc. We have the whole math. We just hired a very, very top-notch 6-year SaaS guy who's actually coming on board, built India's largest SaaS company, and yeah, I'm learning from him on how to look at all of these things. A bit new for us too, to be very honest. But yeah, net quite basics. Just make sure the CAC LTV math makes sense.
Any kung fu moves that you're using at Oola and Nipun in order to?
No, I always say like how unglamorous our world is. We are a combination of good old-fashioned feet on street acquisition, where our CAC is incredibly predictable, and of course of the digital era, where we're using channels like Facebook and YouTube and TikTok and so on. And then how we manage what we make from the merchants that we acquire, right? So ours is not a Ours is a very brick by brick building kind of business, right? Obviously that also results in long-term moats getting created and stickiness of customers in the process, but it's not very glamorous. I wish I could say that, we have some secret sauce or ninja moves or whatever you called it. It's mechanical.
Understood. Well, let's come back to the financial services topic. I would say that every single solitary business plan that involves, in some measure, servicing SMEs and entails or gives access to even a shred of data from that SME, every single one of those businesses has aspirations of rolling out financial services. And it would seem to me that in the absolute ideal, you would want access to the absolute entire transactional data of any of that company's dealings. Failing that, you would hopefully at least get the highest quality data. And I think getting one or both is almost impossible in this world. And so I would like to ask you guys, in order to meet that longer term goal of offering very high value additive and sophisticated financial products, what is the completeness of and the quality of the data that you glean in working with your customers?
Actually, financial services, okay, the reason why almost, everybody wants to do financial services, right? Like that, but at the same time, I always say, I reference back to India and said, Amazon is not doing State Bank of India, and neither State Bank of India is doing Amazon.com. So companies have to definitely build DNAs. Sometimes those DNAs can be interlinked, but you can't try to be it all, right? Like I think that's an important lesson for, let's say, all entrepreneurs to remember. Now, when you look at from a merchant point of view, if you ask him, a merchant of almost any size, in the top three problems, cash flow will always show up. Cash flow will always show up in these top three problems, which is why most entrepreneurs like us end up referencing the point of financial services, because if you really care about your merchant, you can't run away from that logic. It's exactly like what Nipun just said, how credit and retail are so interconnected. What is that about? It's about the cash flow in between, right? And that's how it's interconnected. Now, the way, at least I look at building a good financial services business, and the reason why we haven't yet done it, and we will do it down the line, because I think it's very, very hard, is you need to build a great financial services business. You need to be in the flow of the money, okay? You need to be either in the inflow of the money or you need to be in the outflow of the money, but you still need to be in the flow of the money to be really better in inflow sometimes than outflow in my view, but you really need to be in the flow of the money to really be able to build something that is solid and sustainable. And as you look at Square, you look at Shopify, you look at many players in the world, they've all figured that piece out. So as an entrepreneur, my view is, I think of not financial services today, I think of how can I be in before I build my ambition towards financial services step by step. That's my view.
Yeah, that's a very important point. The flow of the money. So one step. So Alan, you talked a little bit about data, and Krishnan talked about flow of the money. Okay, so now let's just see how this builds together, right, into the overall picture. There are two sides to any financial services: a supply side, which is what is your cost of capital, how are you raising money, and so on, and then there is a demand side. So let me focus on the demand side, since these 2 points are connected to demand. You have to source new customers. You're sourcing deals or opportunities to lend. Then you have to have some way of underwriting the sourced deals. And then once you've given out the loan, you need to have a way of collecting. Any company that addresses all three, ideally, okay, is incredibly advantaged when it comes to lending. Right? I'll give an example of collections, since it's so pertinent to our sector, right? Yes, data is incredibly important. Okay, I'm not saying what I'm about to say to undermine that, but collections is often gets swept under the rug because it's an uncomfortable topic, right? But collections isn't just always recovery. It's not like you have to call someone and scream at them. Sometimes it's simple things. Are reminders needed? Or economics? you have, I'll give you a very pertinent example, which will be very relevant for the audience. In terms of collection, suppose someone wants to buy a fridge. Okay, there is you can buy it upfront or you can buy it in monthly installments. Now, the problem with monthly installments is it's a bullet payment at the end of the month or on a particular day in the month, which works fine for collecting cash. But the problem is that the guy who's paying doesn't want to give you a boatload of money on one day because their whole business runs on cash flow. So ideally, if they could help it, they would want a little bit of money going from their wallet every day or so. But that is impractical to collect. So then certain segments and certain products just completely gets priced out of the market. Right. Now, for Oola, we have delivery guys going to stores. They pick up cash for our deliveries, and they're perfectly capable of picking up cash for any fridge loan that someone else might have given. Right, and that collection can happen 5 times a week. Right, so what wasn't possible is now becoming possible. And right, of course, now I'm talking about the vast majority of Indonesia, which still pays with cash rather than through payment gateways and so on. So again, a lot of capabilities get unlocked on complementarities which didn't previously exist. So when I say financial services is important, it's because we are building company capabilities that aid the ecosystem.
Fair enough. That makes a tremendous amount of sense. Now, Krishnan, before you joined us, Nipun and I were talking about the dichotomy between 1P and 3P, or like a principle-based solution on behalf of your clients in which you own the entire solution, if you will. If it's e-commerce, then you own the warehouses that the products are sent into, you own every part of the fulfillment chain all the way through the last mile delivery. Yep. 3P, standing for third party, relies at least on third party logistics players for things such as delivery. Now, that 1P, 3P dichotomy, I think, applies to any part of the e-commerce space to the extent that what Lumo is doing involves its own platform, its own blood, sweat, and tears and code. And to some extent, you probably rely on third parties. What is the longer term state of Lumo? Is it a turnkey, soup to nuts, we own everything, welcome to our universe? Or is it a patchwork of kind of ancillary relationships, maybe on the financial services side, et cetera? How do you think about that duality?
Yeah, a very good question. So, just to give a bit of background, previously I built a business which is pure 1P, and I went through the struggles of building a 1P business, and I can tell you that it's more often than not a great idea. Having said that, obviously some exceptional people pull that off, and that's all credit to them, but it's not easy. That's what I want to qualify there. With respect to Lumo, I've been very, very clear that we are very much a 3P business. I've always been, what we would love to own is the relationship with the merchant and the software that he uses, right? Like, this is important for us. Like I said, if you remember, I told you the merchant is the center of our world. I want him to be successful on Shopee. I want him to be successful on Tokopedia. I want him to ship very successfully, like, and I can't do all of these things, right? I just can't. I'm not good at doing so many things. So we stay really focused on our relationship with the merchant and the core software that we offer. But already we work with probably 8 to 10 logistics players. And then we work with Shipper, who integrates other logistics players. In terms of payments, we work with 2 or 3 payment gateways. So in every aspect, we always work, because each of these guys are good at what they do, right? And we sort of bring these guys together in a curated format that helps the merchant have the best possible solution at the end of the day, right? And so we are very much a 3P company. Sometime we'll open up an app store, which then can actually, people can just plug in and don't even need to go through us. They can just directly go to the merchant. We're still not there yet, but yeah, that's sort of where we're going. So very much a 3P company long term. That's what we would love to be.
Nipun, Oola, 1P, 3P, go.
Well, interesting. I actually don't see it as a dichotomy. I think both of them happen at the same time in a good e-commerce company, right? And there are certain dimensions on which you have to dial between the 1P, 3P models. And at least that's what I've seen in my life. For example, if SKU variety is very high, so think apparel, think furniture, furnishings, think any place where there is new designs, new things coming up, and there are millions of fragmented producers, 3P is unquestionably the better answer to go, right? Because you cannot you cannot predict that, okay, this particular style of t-shirt is going to sell how much, and then you're trying to stock it up. Now, if the SKU variety is low, where 300, 500 SKUs are 70-80% of the market, unlikely that 3P will win because other dimensions matter more. For example, what is the service SLA required? Okay, if your t-shirt is late by 1 day, does it matter? Maybe you'll get a little irritated, but again, it doesn't matter as much. But on the other hand, let's say you're a store and your packet of Indomie, which is one of the fastest selling goods, gets delayed and you're out of stock. And your customer walks into your store and says, I want Indomie. And you say, man, I ordered it from Oola and they haven't delivered it yet. It's supposed to come tomorrow. I lost face, I lost sale. Matters, right? Are you able to guarantee that SLA? I'll give you a great example. Average fulfillment is about 70% from a supplier to a retailer, which means that if you order 2 items, okay, from 2 different sellers, and assuming they're independent sellers, it's not 70% fulfillment. It's 70% times 70%, 50% fulfillment. So you have 1 in 2 shot that you will actually get your order on how you've built it. Another aspect is the value chain margins. Most of the times you will find, for example, in apparel, the value chain margins are very high, highly fragmented. The guy who produces to the point where you buy the t-shirt, incredible amount of space for any 3P player to play in, right? But if you now go to a space like FMCG or other consumables, the value chain margins are compressed, right? So expecting that a 3P player can orchestrate by playing traffic cop is possible, but it won't be the starting point because it's just very, very hard to guarantee repeats if you're constantly providing poor SLAs.
Understood. Gentlemen, an absolute pleasure to have you join us today. Very much looking forward to seeing Oola and Lumo in their own ways innovate and disrupt on behalf of your SME partners. And I also want to thank our friends at Deal Street Asia for making this all possible. Thanks, gentlemen, for joining once again.
Thank you so much, Alan. Always a pleasure.
Yeah, pleasure.